Happy Independence Day.
Good morning. Welcome to Trade Live with IG on this lovely sunny Friday.
We got Luke Moore in the house with myself, Rich McDonald. How are we doing? Good morning to you, everybody. We've also got Angeline filming us in the background. Good morning, Angeline.
You've caught me again. You may not know this, but I'm half-sighted in this eye. So I don't have any...
Did you not see her?
No, every time that you're in the back of the studio...
Angeline, come on, come in and say hi. Come on. Say hi to everybody. They're not used to seeing you at this time.
Hello.
Here she is.
Hello, everyone. I am going to tell you, you are going to love Joachim who's coming in today, especially you.
Oh.
Joachim is calling 10% correction in the next 3 months.
Thank
what?
you.
In what?
It will remain equal, what we know with the big, beautiful bill.
Right.
All the yesterday, I said it's going to be close.
Yeah.
Boy, was it close. But if, all things remain equal, Luke's looking a bit worried. Maybe he's like his portfolio.
I'm just saying, what's going to cut by 10%?
All his stuff's on cash right now, waiting to be deployed.
Yeah, it's also short as well, though.
Right, I'll be back.
Good stuff, yeah. Go do your hair. Right, so what is coming up on today's show? You've had a little preview there from Angeline, but that's right. If the aliens don't come in and take us with Will Smith,
Yes.
then we've got Luke Moore through to 8:15, and then himself and myself are going to do a Smarter Web Company update. I had the great pleasure of going to the Bitcoin Treasury conference yesterday, and really insightful. So I will deliver all the news to you at 8:15. Then, what's 8:30, Luke?
8:30, we're going for gold with a special guest, Simon Popple, will be joining us.
Our gold expert, and it could be very timely as well after the shenanigans of last night.
And then we clearly don't have a week ahead, but at 9 o'clock.
Ref problem.
At 9 o'clock, Elliot is going to be joining us for an update on options. And then at 9:20, as Ange just alluded to there, Joachim Clement is going to be coming in to talk investing experiences, clearly with a bit of a market call stuff.
And that is, Chris Beachy's here for the week ahead, but referee.
This is have you ever seen those memes of the please fix? Who've seen those? Yeah. It's like you can always catch an investment banker or someone that's just been given a job by their boss because they're sat in like the most crazy places with their laptop, just sitting there trying to fix things. It's like in the airport or kind of on the beach, they've just been dropped a please fix because you've got all these ref fields.
We took one up the top of a mountain after a 4-hour hike.
What, you got one?
Yeah. Rahel was with her laptop and sent it into her work. Good, right. So, an alien invasion would be a great short. Yeah, that might get me out of trouble with my calls.
You know what? The market would still rally, I reckon, because it'll just be like, oh, look at what tech can we find?
Yeah, exactly.
Market or roof.
Yeah.
Yes. It was the White House, wasn't it? Independence Day with my kind of the iconic clip of the White House just getting blown to pieces.
Wow.
By the aliens.
Yeah.
So that's all my brain is of Independence Day. I'm like, why are we... I think as a kid, I even thought, why are we celebrating the White House getting blown up?
Has anyone else noticed Luke Moore's got new glasses? I've just spotted them myself.
Oh, yeah, what do you think? Turns out, and this is really boring, I've gone from short-sighted to long-sighted in the last 3 years.
Is that a thing? Didn't know that was possible.
Yeah, I mean, it's called puberty.
Yes.
I don't know. But yeah, no, pick these up this week. I can kind of finally see, which is quite nice. I'm pretty happy with that.
Good morning, call me Walter. Are you a new guest to the show? There was a lot of Bitcoin Treasury enthusiasts yesterday, and of course I told them about the show. Andrew mentioned the show to them because originally they thought that I was his assistant.
Oh yeah, very good.
His PA.
Nice.
And so yeah, we let a few people away with that. And
also,
then,
I've actually got to give a shout out. Did you see the note I sent you yesterday afternoon?
No.
My father-in-law.
Ah, yes.
My father-in-law, Ian Ord. So if you're watching, good morning to you. Ian runs a marketing business up in Aberdeen. And myself and Beachy did a piece last week on the BP Shell deal. And so I forwarded it across to him to say, look, FYI, this is something that we covered in the show this morning. And he pinged out to his clients as part of their weekly update. So Fifth Ring up in Aberdeen, if anybody needs a marketing company. Quick shout out to you and thank you, Ian, for promoting the show. So if you've joined us as a result of Ian's little shout out, then welcome.
Yeah, give us a little subscribe on the chat there. We've got away from setting ourselves tough targets, so we're going to have to do that for next week. We might have a look at that
We
later.
need a new share.
See, yeah, maybe up to 1,300.
Okay. Right. We'll suggest if we'll think of a share that's priced around that level.
Yeah,
But if
£13.
you can suggest any that are say 12 quid.
Yeah.
If we're £10, if we're £10.30 at the moment.
What's Glaxo? A bit higher now, is it?
Yeah. Let's have a little look.
Right, why don't we go into some overnight action? Let's look at what's happened. So yeah, we've got to go through the big barmy bill that's managed to pass.
Big,
We have to
beautiful
look-
bill.
That's the one. Love that. It's better every time. Then we've got to look at how July 9th is. It's coming up quickly, isn't it? 5 days away.
5 days away. Yeah.
Yeah,
5 days
so-
away. Who is in line for reciprocal tariffs? Who's in line for aggressive tariffs? I've got a really cool graphic for you, so we'll show you that.
Excited about that. We'll go back over the data yesterday. Wow, 147. Who got that? I was way off. I think I was about half, was I? So, yeah, Luke's going to give the shout out to the person who got closest on that. 4.1. Forget the survey. The survey, like non-farm's just a bit of a game. But the unemployment rate at 4.1%, that was really interesting. That was bumper.
Yeah, I think it's more the case that I think the market knows now that the non-farm payroll figure itself is pretty nonsensical because of the revisions. So I was having a chat with a client just before, actually, who's kind of long dollar yen calls. So trying to play it that way.
Right.
And we were talking a lot about the revision. So you've basically got to look back at the last 3 months on an average, or 4 months on an average, to get a real kind of idea, and use it as a bit of a rolling average. Because the revisions, I don't have the figure to hand, but the problem is you're going to get these announcements on the non-farm payroll figure, but then the previous 2 months get walked back.
Yeah.
So actually, who's right? The ADP, which came in on Wednesday, it was pretty shocking, or the non-farm payrolls? Clearly, the market liked it yesterday. Record highs on the S&P.
Yeah, but the
record highs
unemployment
and
rate's
everything
clean,
around.
and that's backing up the figures yesterday.
Yeah, so 4.1%. I mean, what's full employment for?
Yeah.
What do they decide? So it's basically full employment.
Yeah.
Yeah. Well, there was a lot of discussion around the kind of temporary workers that were going to be leaving the labour force, and it's starting to be felt through the data.
Yeah.
Seems to be.
So we that is it. The chance of a rate cut in July is gone, long gone. September starting to get called into question. It certainly, it gives the credibility, back to the power of Powell. And yeah, do we get any rate cuts? You still got 50 bips priced in for the rest of the year.
Yep.
All the banks calling for 3 rate cuts look like they're wrong so far. And yeah,
It moved from 50. It's 50 bips now, but it was 66 before. So 66 basis cuts, now just 50 basis points of cuts. But I just can't. I know that you're typically quite bearish, but I just can't. Besson made a good comment overnight. So Besson was talking about being challenged on the dollar, right? And he said, "Look, I've made a career out of watching the markets as opposed to listening to you lot."
yes.
And like listening to you lot, as in kind of economists and market participants and people like us that are talking about it, would say that these figures, are starting to deteriorate, and therefore the equity market should come down and the dollar should be weak. But he's saying, play what you see. Tariffs have come in. The stock market has bounced 15% off the lows, 20% off the lows, whatever the S&P is. So therefore the market is getting used to these tariffs. That's what he's saying.
Tariff.
It's,
Love the
it's
tariffs.
like when you put what is it that you put in a rabbit in a saucepan, and you don't put it in boiling water, you put it in cold water and then start to heat it up.
Frog.
Oh, I do it with a rabbit.
No, I'm not going to go into that.
But yeah, Poppy is completely right. Why did the market? Why did the dollar not rally yesterday? And the dollar didn't rally yesterday because this ridiculous bill went through Parliament. So yesterday was all about the bill going through. 218 votes to 214. They got it in the end.
Yes.
The one
And here is
big,
my
beautiful
Independence
bill.
Day branded big, beautiful bill. So I think it's worth, because it's 900 pages long.
Bill Clinton must be loving this.
I don't know why. Because
That's his nickname, isn't it?
what? Oh, big beautiful Bill. I got to come on, right. I'm gonna get a coffee in the break. But so the conversation here is about across the 900 pages what changes, right? They're trying to grow the economy. They're trying to reduce the deficit by introducing things like tariffs, by introducing things like tax cuts that stimulate growth. So these are the big key pieces, and this has probably been covered extensively. But I think now that it's gone to basically Donald to sign off on, we need to explain it. So the big piece in here was the permanent extension of the tax cuts they introduced in 2017. They are increasing child credit. They are cutting taxes on tips and overtime. That's been extended through to 2028. They are reducing estate tax. The SALT deduction cap has been raised to 40K from 10. And so they're getting a lot of tax breaks. How are they going to pay for it?
Well, they're not.
Medicaid.
Debt is how they're paying for it.
They've cut $1 trillion out of safety net programs. They've cut money out of Medicaid and care. It says here that 11.8 million Americans could lose their health insurance. 3.2 million reduction in SNAP participation, which is the food stamps. 47 billion spending changes. They're increasing military spending. They're increasing money for the border wall. And
really interesting though that obviously Starmer couldn't get the welfare package through, but then American goes in and kills off a lot of its citizens.
Well, I suppose the challenge here is everything that RFK is doing. Because if you think about the whole administration, you've got tax, you've got spending. Bessent's talked a lot about deregulation and changing the way that the market is set up.
Yeah.
And so my question, and I don't know the answer to this, is would these cuts marry up with the drug pricing proposals that they put through maybe about a month or so ago, where it was the universal drug proposal? So they're forcing drug companies to cut their spend. So how much of that is offset by these spending cuts? I don't know.
Let's go to the expert, the person that knows best, one of the top, most experienced followers of the US economy and history, Ray Dalio. Now that the budget bill has passed Congress, we can see what the projections look like. So let's put them into the numbers. The bill is expected to lead to spending of $7 trillion a year with inflows of 5. So the debt, which is now about 6 times of the money taken, right? So 6 years of income, 100% of GDP and 230,000 per American family will rise over 10 years to 7.5 times the money taken in. 130% of GDP and 425,000 per family. That will increase interest and principal payments on the debt from 10 trillion, which is 1 in interest, 9 in principal, to 18, an 80% increase in annual repayments of debt, of which 2 trillion will be interest payments. That's bigger than welfare. That's bigger than defense. That is bigger than any other line of the budget. Now, this will lead to a big squeezing out, right? So you've got to cut spending aggressively, or unimaginable tax increases. This bill is absolutely screwing over the future generation beyond anybody can get their head around right now. The result is a lot of printing, QE, devaluing of fiat money, and pushing interest rates to unattractively low levels. The printing and devaluing, not good for holding bonds, it's the storeholder wealth. What's bad for bonds and US credit markets is bad for everyone, because the Treasury market is the backbone of capital markets, which are the backbones of economic and social conditions. Unless this path is soon rectified to bring the budget deficit from 7% down to 3%, which is impossible, then painful disruptions will likely occur. That is it. It's the beginning of the end as soon as this bill is signed today. The next financial crisis is guaranteed.
Punchy. Do you reckon Ray Dalio's long bonds? Do you reckon he's long bonds?
What? I actually think he's past caring. He just doesn't want to see that's it, the end of America.
Yeah, there's, not to defend the bill, but to provide a different perspective. Supposedly the bill's been...
That's just numbers.
Yeah. The bill has been written on a 2.5% GDP expectation by the Committee of Budgetary Responsibilities.
Real
GDP.
Yep.
Yeah. So they are projecting that it's actually going to grow GDP to between 4 and 5%.
Yeah, not real.
Real GDP in the sense of dollar adjusted. So
No, inflation adjusted.
Inflation adjusted.
Because this is going to this brings inflation back on the table.
yeah, potentially.
So there's not a chance in the world you get 5% GDP growth, inflation adjusted, because you've just taken the chance of the Fed getting back to their inflation target is blown out of the water. Inflation starts going up again because this is stimulus.
It's
Stimulus that destroys fiat currency yet again. That's why I think Simon Pop will be really interesting to speak to today.
Yeah, I'd love to get a different perspective on it. I'm hard-coded just to be continually bullish US markets. I continually get
in the short term, fine, because
I continually get proved wrong for every horrifically bearish, smart-sounding person. So
because they keep on throwing trillion after trillion of debt-financed stimulus into the economy. Global debt is increased by $7 trillion in the first quarter, yet again in the second quarter. And of course, markets are going to go up when the
stimmy checks come
when
out.
the money supply is ever expanding.
So what's the trade then?
It's long gold and potentially Bitcoin. We just become best friends.
Yeah, potentially Bitcoin. There's some fantastic work by a company that we used to do some work with, Real Vision, Raoul Pal's company, if you follow them on Twitter. And the correlation between the M2 money supply and Bitcoin is almost identical with a 3-month lag.
Yeah.
So as M2 money supply is bouncing, a couple of months later, the price of Bitcoin moves, and that offsets exactly what you're talking about. It's going to be interesting to see how it all plays
and projected as well, right? So projected growth in money supply changes because of this.
Yeah.
And so therefore, you would imagine that suddenly you get some changes to expectations in gold. I would think. We'll see.
Let's see. Should we talk tariffs quickly?
Go on then.
Go on then. So supposedly today is the day that Trump is going to be sending out 10 to 12 letters based on, hurry the hell up guys, come on, we've got a deadline to meet. So 5 days away, we've got the tariff deadline. And I think it's worth just being aware of the state of play. So if you want to put my screen back up, Bloomberg have done a fantastic piece this morning. And I don't know if everybody's eye is going to be able to see this, but of course mine can because I've got new glasses. You've got the list on the left-hand side. Green, UK and Vietnam, these are deals that are supposedly already done. China, the red is because it is retaliatory. So this is a threatening stance. You've got the EU and India there as we've retaliated with tariffs. We don't think you're negotiating in good faith, so therefore we're going to put some more aggressive pieces on you. And then the others, Taiwan through Switzerland, we're negotiating and we're doing well enough. So, I mean, what do you see in there? What are the highlights? China, the effective tariff rate over last year was 10.9, now it's 34, potentially. The EU, the effective tariff rate has been 1.2, now it's 50. That to me is pretty scary stuff for them, so I'm surprised they're still not at the negotiating table.
Yeah.
This is...
I think all in all, it takes the global tariffs up from like 4 or 5% to 15%.
On a global basis?
On a global basis, yeah. So, it's significant. The numbers were just made up in complete bullshit to start with.
Yeah.
But what we're coming down to is still quite a meaningful increase. Again, inflationary.
Yeah, and that's the question why Powell has not moved yet, because he doesn't know what the inflationary impact is.
Yeah.
You'd argue, you see the reaction to the Nike stock and the Lululemon stock yesterday when the deal got announced for Vietnam. Like I would still expect as a broker to see these kind of pops in sectors as a playbook over the next few days. So, what are we looking at? We're probably looking at the automotive sector. We're looking at steel. We're looking at any import-export businesses. We're probably looking at clothing manufacturers.
Shall we have a look at the reaction yesterday?
Shall we? It was the day before, wasn't it, for Nike?
Yeah,
day
but
before.
just on US stocks yesterday. So we had, decent move. Intel back higher after its disappointment. Actually, there's a story we've got to update you on Piers' thing there. Citi, the banks, that was who had a big day yesterday, which obviously rates.
Yeah. So rate cuts being diminished means financials good. I mean, funny enough, out in the UK, the banks got absolutely killed with Rachel Reeves crying, and it didn't retrace anywhere near as much. So Barclays, Lloyds, and NatWest is still lower than the kind of pre-Teary meltdown. So that's one thing to just be aware of in the UK there.
So we did see some confidence though. So from Schroders, Fidelity, and BlackRock, all piled into UK gilts yesterday after Starmer gave his thumbs up that Rachel is doing a fantastic job and she's got his full backing.
They had to come into
board.
They had to come into bat for her. I mean, it couldn't have got much worse for Starmer on Wednesday, could it? He's had a massive walk down on the welfare bill, and then his right hand chancellor is kind of breaking down in front of him. I mean, he had to come out and bat for her because otherwise it's just not a good look at all for the government.
But the city saying that the jitters were just a storm in the teacup, and that UK debt was an attractive asset as investors expected the BOE to speed up its interest rate cuts this year. Now, you have a really strong jobs number in the US, and you've got expectations Bank of England going to speed up interest rate cuts here. Why is cable 136.5? Still. I mean, it's not just cable though. I think the dollar is continuing to be weak as a result of the big beautiful bill. So I wonder if the euro is now fully priced, should we say?
I'm going to say probably not. I think it's.
I've got more.
Where is it? 10.
No, that's the thing.
No,
118.
Euro dollar's 118.
Yes.
When was the last time I looked at FX World? Wow. Okay, I haven't seen it in a while.
See, that's the thing. Is that the move is just absolutely incredible. That you think, has that got a little bit? There we go.
Has it got
a little bit of retracement there down to a 115?
This is just a minor retracement.
I mean, zoom out a little bit. That's probably a sell calls at 118, is it not? Maybe we're a little bit close. Is that not kind of sell calls at 120, perhaps?
I wonder, when do you think the last time we were up there was?
Well, there you go.
Oh, there you go.
2021.
Interesting.
So how much of that is the kind of boost that the euro has had with all the defence spending? And so there's actually a bit of economic strength coming through alongside the US kind of shooting itself in the face.
Well, it's gone from 105 to 118, so that is 12%, and cable's gone from 126 to 137, which is about 9%. So I'm,
well, look at the DXY.
3% difference.
Look at the dollar index, because the dollar index is mainly weighted towards the euro. There's a bit, and then I think the yen, and then the pound. And there you go. That's the story. As much as it's euro and sterling strength, it's dollar weakness.
Oh yeah, absolutely.
Absolutely dollar weakness.
That for as bad as the BBB is, right? I don't think UK and Europe are in great places either.
No, I mean, could you argue anybody's in a good place at the moment? If you were back in your kind of macro fund days, where are you putting your money just now?
So it's got to be Switzerland, isn't it?
Switzerland.
I think so.
Don't know. I tell you what was interesting as a chart, and I've just asked yesterday. I asked the guys to have a look at it. Is the Hong Kong dollar against the US? You know how it trades between a range, between where it gets defended? This thing has absolutely roofed to the top end of the range. If you have a little look at it, look at dollar Hong Kong. USD HKD.
Oh my!
Look at that. How's that for a move?
Oof.
I've asked the guys to take a little look at it. So expect an article to be written on IG soon. But that is some hell of a move.
775 to 784 in a currency that's in a band.
And you can see the band, right? You can see that top and bottom
Yeah.
band there, but it's just been incredibly defended.
And what about the old Chinese?
Chinese yuan, at the bottom of the list, there's dollar CNH, there you go.
Ah, yeah, so that. Yeah, of course, that's come off because of the dollar weakness.
Because the dollar
as well.
move. Yeah.
Yeah, cool. It's certainly interesting times. I wouldn't want big risk for the next few weeks.
Well, it's tough. It's tough to allocate max long at all-time highs. It's tough to do that. But typically, all-time highs beget all-time highs. You know, we've seen 6 in a row now in the S&P.
Well, but you repeatedly, you have person after person saying they're buying it, knowing that they just want to sell it.
So it's a
They're
trade.
buying it. It's a trade because it's going up, because the momentum's there.
Yeah.
Everybody knows that, you know, you get new highs. There's going to be like 13 new highs, right? But they don't believe in it. They just believe in the market. They believe in the price action.
Yeah.
Now, it doesn't take much to throw that off, because suddenly you're left holding the pile of shit.
Yeah, I still think there's, you know, this 4 trillion supposedly in money markets and potential rate cuts. To me, they're the 2 biggest bullish factors in the market at the moment, from a momentum.
But why would you move your money out of money markets when you're getting 4.25% on it?
when rates get cut. So it's the double whammy. So now the fact that so it's delayed the thesis, but I still think longer term. Do you remember our calls for S&P when we did that podcast last year?
Which podcast?
The one that we did on Talking Shop. Mine was 7-1, and it'd be aggressive, but I can see the pathway.
You're 15% off.
We've just done 15% in about 2 months.
Yeah, from the lows.
Yeah. Well, come on, right? We need to
Go
cut.
back to the highs. That's it.
We need-
1% above, and you're getting Billy Bullish saying we're going another 15%.
15%
Is
up.
that
15%.
it? You're a full bull at the moment.
I'm long. Yeah, I'm long. I'm a balanced long in a
You
diversified
still
pot.
think we're going to 7-1?
I would bet that we see 7-1 before we see 15% down.
And FTSE?
FTSE.
Because FTSE's right there, 1% away from all-time highs.
Yeah, less confident on FTSE just because of the way that we can talk about this afterwards, because of the save our stock market piece. The good quality assets just getting bought out of the FTSE. So I don't know if we got the growth to continue pushing that index higher because all the companies are getting taken private.
All the companies aren't getting taken private. Come on.
Oh, there's a lot
Anything that's meaningful in the FTSE's still there.
for now.
You've had like maybe 1% of anything.
Yeah, I think the FTSE's still quite a defensive index.
Oh, it's definitely defensive, but I want to be defensive.
Yeah.
If I'm seeing Nvidia closing in on 4 trillion market cap, I'm starting to think, how much more can Nvidia go? And I don't believe in earnings being above $300. So I can't buy US equities on 23 times earnings. So therefore, I want to move defensive. I want to be in gold because of what's just happened. I want to be in defensive stocks because of what's just happened and what we've got ahead.
I think we have to wait and see what happens. I think we have to wait and see. As I said, I'm slightly Pavlovian about it. So I just allocate towards a diversified pot every month, and it's been proving me right for the past couple of years.
Oh my goodness, we've talked right through. Do we have a quick chart?
Producer Phil there telling us that we've run out of time.
All right, we'll go to the chart tomorrow.
Tomorrow,
sorry,
Sunday.
not tomorrow. After the break. Right, get your bell in your hand, Luke Moore.
Uwe Lebel. Oh, look at this tennis racket we've got here. How cool is this? Look.
That is pretty cool, isn't it?
Can you see that? I don't think we can,
that-
can we? You can kind of see against my shirt. You'll be able
Against
to see
your
it.
shirt, yeah.
IG, there you go. Is that going to work?
That's
Yeah, there you go. Right, I got to get the bell.
Right, go on. Let's go to the opening bell straight through. First time we've ever done it.
Without a break.
First time we've ever gone straight
I
through.
don't have a pen. I have to use this.
Come on, give it some.
I think I'm using some kind of makeup, so I'm going to pop that back down. didn't have a pen.
Right, Scottish Mortgage Trust, there it is, £10.30. Did actually mean to ask Bill Blaine about that one. Next time he's on, we will do a thorough investigation there. Hammerson down, I think that might be a wide spread, but Kingies is definitely down. You've got BP just giving back 0.5% there. And the banks
down a little bit.
some up. Interesting.
There's not really a theme there, is there? It's kind of...
The theme is July the 4th, I think, by the looks.
Yeah, there's not much going on, and people are just going to reweight their portfolios. Fresnillo at the top of the pops there, mining on their own, it looks like.
That's one. Gold miners is one that I do want to, obviously not Fresnillo, but...
Yeah, we did actually have some news from AstraZeneca this morning. Their Imfinzi drug has been approved in the EU for bladder cancer. We didn't go through this because, of course, we were nattering away. Fever Tree, there's been a buy tip in the Telegraph with an article that says how the very best companies survive the toughest economic times.
We spoke about that the other day.
Did you?
I wonder if the Times are watching us.
The Telegraph.
Ah, no, not them.
They've also tipped Ecofin Global as a buy. The world's hunger for energy is showing no signs of slowing, and here's how to profit. Never heard of Ecofin Global?
No.
As a stock?
No. Right, the miners giving up a little bit though. Antos down 1.5. You got Glencore popped its head above £3, £3 and 5 yesterday, and you just seen given a little bit back there. But nice to see it back, starting with a 3 again. Weatherspoons, you going to be out drinking this weekend, Luke?
Am I going to be out drinking this weekend? Yeah, I think I am actually. Yeah. To be clear.
It's a Saturday.
It's a Saturday. It's actually Pride Night tomorrow, isn't it? Pride Parade in London.
Is it?
I'm pretty sure it's the Pride Parade in London, yes. I'm going to be out celebrating with some of my pals.
I got a big afternoon this afternoon, actually.
What are we up to this afternoon?
Big paddle game.
Big paddle game.
Oh, big paddle game.
That's what we should do. We should create paddle courts. That's what we should do, shouldn't we?
I don't know. I think that might have been that ship sailed. Right. Let us know what you guys are looking at.
Top of the footsie, you'll never guess. Vodafone.
What a stock.
Where are you going?
What
Yeah,
a stock.
There you go. 79 pence.
Don't talk to me if it doesn't start with an 80.
Fine.
Will Vodafone hit 80 pence today? That is Terence's big question. Now, Terence is looking very fly today. I think we have to get Terence on camera because he walked in with a Caribbean shirt and a pair of sunglasses today.
Hell yeah.
As we got...
Because it's dark inside, isn't it?
Terence got a date later on.
You need to wear sunglasses indoors. That's the important piece.
Right, how are you all doing? And let us know what you're looking at. We've got over 100 of you on online here, which is surprising on July the 4th holiday.
Lovely.
So very happy to have you. In 6 minutes' time, as well as doing the chart of the day, we are going to have a Smarter Web update. We had the CEO of Smarter Web and Concilium presenting yesterday at the Bitcoin Treasury Conference held by Peterhouse in Minster House.
I bet that was a bit spicy, wasn't it, given the last month that we've had?
I tell you what, it was standing room only.
I bet it was. Yeah, busy.
Yeah,
I bet it was.
Really interesting day. We'll go into it more in 5 minutes.
Should we look at Europe? What's going on in Europa?
Let's have big
because I believe Lagarde is due to speak at some point this morning. I believe she's speaking at, and I can tell you the time.
Yes, Santander. Gavin Acker's just pointing out that he's got his eye on Santander.
Haven't got the time for Lagarde to speak, but we've got a couple of people speaking. Bank of England Taylor is speaking later on this evening, 6:30. I think Lagarde's speaking at 8:30.
Right, Havas up back above 150. That's one to keep an eye on. That seems to have valuation backing it. We've got I can't believe there's not a move over 1% after new all-time highs. It's quite a lot of negativity this morning.
Well, yeah. Look at the luxury stocks: LVMH, Kering, L'Oreal. They're all taking a bit of a shower. Have there been any Chinese data overnight? I don't think there has.
I don't think so. We'll take a look in a second, but we have had the sort of argumentative comments from Trump on tariffs, that tariffs are going to start charging on August the 1st. He's sending out the letters already warning people. Von der Leyen saying that the EU will not manage to do an agreement in detail, but it hopes to get agreement in principle.
That's what I say. That's what I say when the wife asks me to do the washing up. I'm like, look, I'm not going to do it in detail. But can we arrange a framework here? It's like I'm going to commit to something, but I don't actually want to do what I'm doing.
It's not commitment's a little bit too much, a bit like my love life. You don't go as far as to commit. You'd have an agreement in principle.
So should we have a little look what Bloomberg was saying this morning? I'm just going to zoom in on our graphic that we had on earlier. Yeah, there we go. So the EU approved but suspended countermeasures against the steel and aluminium tariffs. They've prepared the EU itself has prepared additional retaliatory options targeting 100 billion euros in extra tariffs towards the US. They have agreed to accept a 10% baseline tariff, and there's an expectation of a deal before the July 9th deadline. That was it, I recall. They said we're happy to accept the baseline tariff, but we want exceptions on this. It's the argument with your wife, why are you doing the washing up? It's like, look, I will give you the washing up, but I need a night out with the boys. That's kind of like, it's like, can I have my cake and eat it? And that's what they're trying to do.
The EU are trying their very hardest not to get, a Vietnam kind of deal where they give up everything and don't get much in return just because they're getting threatened by a bully.
I think the Vietnam deal was less about Vietnam and more about China, though. Do you see the 40% tariff rate on trans shipping?
Yeah.
So anything that's routing through Vietnam is going to get a 40% tariff. That's what that was about, in my opinion. Although good luck policing it.
Yeah, exactly.
So everything just like the China label gets ripped off and a Vietnam label gets put on it. Good luck trying to police that. I can't imagine.
It's like the oil that was coming into Turkey from Russia.
Yeah, but it was going via India.
No. So Russia was putting the oil into Turkey. Turkey were repackaging it and then sending it to Spain. And that's how they got around the sanctions, allegedly.
Let's look at metals, because we're talking about, I know you're going to get a look on gold later, but let's have a little look at gold and silver, because of course gold and silver have been ripping all year.
I have bought, last night after I noticed this deal, I have bought a 33.50 call for Wednesday, I think it is, on gold, and sold a 3,300 put to finance it. So I paid 18 ticks, or $18, for the 33.50 call, and I received 9 for selling the 3,300 put. So therefore, my break even is 9
for Wednesday next week.
33.59. I think if people have a good think about it over the weekend, and they come back and look at Ray Dalio's kind of analysis, you get maybe a little bit more voice of reason coming out. I could see gold up 4% by then.
Well, I mean, look, it's already done $17. You might have time working against you there. I'm not sure by Wednesday it happens. I'm not sure by Wednesday.
It's one of those binary things, though. Either people come out and call the bill for what it is, or you get nothing. So. And I don't think there's too much more downside in gold.
And how much cost was it? Did you get the put to make?
Yeah, I put a decent amount behind it, actually.
So the put hasn't offset it all?
No, it cost me, I don't know, $400 or something. $50 a point.
Right, okay. Yeah.
And I'm short some euro dollar here.
Yeah, I like the euro dollar short. Gold long, I can see
Here it is. So gold weekly Wednesday, 33.50 call, paid 18.9 and sold the 3,300 put. So $50 a point each leg.
Mm-hmm.
And I think it's a little bit in profit so far. Yeah, $300 in profit so far.
Nice. Yeah, you might actually end up, if today's so thin on holiday trade, and actually what I might do.
But I think that's good value, cost wise.
Cost wise, sure. Sorry, what?
$9. I'm paying 35 basis points, and potentially I think the upside in gold's 4% from here.
I think you might actually get out of jail, not jail necessarily, but because you're going to be so thin today, if you get a pop up with algorithm moves. Let's say someone has
Yeah.
left their algo on, and you get a bit of a, I don't know, pushes it up another $20 or so. You might be able to get out of it before so.
Yeah. Imagine getting out of that though for 1% gain, and then it goes another 3.
It might actually just be worth, because we're on the show, if you want to pop my chart on, we are, I am on the show. Today, just the hours for today, right?
Cool.
Because we are seeing the US equities market is closed. Can I zoom in here a little bit and give you, so we've got US equities and soft commodities are closed, of course. We're going to be pricing index futures till 6. We're going to be offering out vows between 6 and 9.
We get a night off, do we?
We get a night off. Yeah. Happy early Friday weekend. A client of mine that trades US stocks, he was like, great, I've gone away for the weekend.
Yeah.
Done. I'm going away. Yeah, he's got out.
4th of July, we used to always go to Zuma restaurant for a big lunch.
Nice.
All people from different banks, different clients, because, nothing was going to happen in the afternoon.
Yeah, exactly. I mean, the point I was just going to make here that energies and metals close early tonight, 7:30. So if you are talking about your gold trade, that's going to be closing early this morning, early at 4:30. VIX futures are closing early. Brent, UK nat gas, heating oil, that will close at 6:30, and then we'll be open again on Sunday evening.
Boise, I do not disagree. Boise's saying, what about just buying and holding gold at these levels? I wanted a little bit of spice in there.
A little bit of spice.
So yeah, I probably wouldn't buy in that size, but I was prepared to. But yeah, I like that.
Yeah.
Right, we have got the old chart of the day. Funny if it's gold now. We've got what kind of stock is it today? It's a US stock.
On a day that the
On
US is
chart
closed.
of the day. It's later than usual. Join us again in a couple of minutes' time for our look at Smarter Web Company. What do we do here? Haven't looked at it on the date.
I need to find a stock for us to track our target against. So I'll be doing that in the break.
There it is. Smarter Web Company trading 340 mids. Right, join us in 2 minutes, but I want to see your guesses in the chat. What is the US stock? Without even seeing the chart, have a guess.
Without even seeing the stock,
Remember
I'm
that
going to
producer Phil that's
say
picked
I'm
it.
going to say ExxonMobil.
I'll go Intel.
Okay, there you go.
Go.
Welcome back, and we are going to bring you a review of Rich's day yesterday at the Bitcoin Treasury Day.
We got to say, I promise you, I did not know what it was. Producer Phil is just a very predictable animal.
Yeah, it was.
I can't believe that we actually got that. Yeah, I'm sorry if I ruined that for anybody, but yeah, that's intel. That is. No prize for me.
Good. I like the Moderna shout. I think the chart hasn't quite come down from high enough and zoomed out enough to really kind of get the kind of crash that Moderna's had.
Yeah.
But no, I do like that as a shout.
Right. So yesterday was the Bitcoin Treasury Market conference in Minster House in the city, and we first of all had our IG. Activation, as they call it, of the Save Our Stock Market, which was great. That was in Spitalfields.
Hence why we've got this, because we did a piece, and actually, if you've seen the advert, the cash returns advert, it's quite good. So, it says Save Our Stock Market with a nice little IG bracket, because of course it's Wimbledon season.
Yeah. Yeah. Really nice. So that was a good day. We were there till about 2:30, and then down to this Bitcoin conference. So we've got the picture here. You've got you can see Andrew there looking nice and casual with the t-shirt and jeans on, and then his lawyer next to him, who has to deal with all the regulations and the setup of the company. And then you've got the guy from Peterhouse, which of course is where a lot of the first raisings and the wraps.
One of the corporate brokers, right?
Yep. And then the Winterfloods team on the left-hand side. So this was great. It was also joined by the Consilium CEO, who was in Singapore, who was live by link. But just a really good run through of the background of the company, the future of the company, and the prospects of the whole theory behind it. Because boy, did he get grilled by Steve Sedgwick on CNBC.
Oh, really?
Well, Sedgwick doesn't get it, right? He's clearly, nobody had really explained to him the sort of model beforehand, because he was calling it MNAV.
Right.
Yeah, he's like, what, this MNAV? And Andrew said, no, you'll find that's pronounced the MNAV.
Nice.
So of course, then Sedgwick was like, "Oh, right, gloves are off," and it was. You either believe in this model or you don't, right? Some people still call strategy a Ponzi, and it's the idea, getting your idea around the head of buying something that's at a multiple of the number of assets it's got. It doesn't sit well with a lot of people.
I've got to admit, I'm still a little bit away with it.
Yeah.
My problem is I've got a fairly aggressive restriction on what I can do because of my job. I've also missed. I feel like I've missed the boat.
So, and that's the interesting thing. So let's have a look at. Andrew told me yesterday that there's now a really good screener on the Smarter Web website. So this is Bitcoin Treasury Analytics for the Smarter Web company. It's got your BTC holdings, which is 773. The shares in issue, 242 million. Share price and the market cap. So the market cap, easy enough. The share price, easy enough. Bitcoin held, we all know. So let's go down to the more interesting stuff, which is where this whole theory is, people a bit tricky to get their head around. The net asset value is the number of Bitcoin that they hold plus the cash on their balance sheet. Right?
That's a billion.
You divide 100 million.
100 million, excuse me.
100 million. And you divide the market cap, which is the top left, so 823 million, divided by that 100, gives you an MNAV of currently 8.22 times. It's as simple as that. It's the top left one, market cap, which is just the number of shares in issue multiplied by the share price. Right? So number of shares multiplied by the share price gives your market cap. And then you divide the market cap by the amount of Bitcoin and cash they hold. And that gives you this multiple. Now that 8.2, you can see is roughly what we were when Andrew was on the show back on the 20th of May. The 20th, where were we? Yeah, exactly, 8.3. So you're at the same price now as you were at 30p in valuation terms.
In valuation terms, yeah.
So when you say you feel you've missed it, it's exactly as it was.
From a valuation perspective,
Well,
sure.
that's the only thing that matters. Price doesn't matter.
But price is how people make money. So you're right, but for you to be buying this at the same MNAV now when the price is at £3, to see the same capital appreciation that you would have seen in those 2 months, whatever it would be, the share price has got to go to, I don't know, £30.
Well, if you're looking for a 10x, then
Correct.
you know,
Yeah.
I'm not sure that should be what people are going into it looking for.
No, sure. But you're also probably not going into a stock like this as a value play either.
Well, it depends, because last week, if you had been watching it, it hit 5 times MNAV. So then,
It becomes
historically, it's a value play, and that's why it's gone up 60% in a week. Because is a 7-day move is 60%.
wow, that's impressive.
So
There is still juice, a lot of juice in it, that you would say. Or at least there's momentum behind the theme still.
well, there's not so much momentum behind the theme, but if you sat and listened to them yesterday, this is here to stay, right? This isn't just a flash in the pan kind of idea. The ideas that they have to continue raising capital and continue to play off the MNAV theme to increase the Bitcoin held. You know, if you buy into it and if you buy into the theory, then you know he's talking about you know more like being one of the getting into the FTSE 100 for a start. And his next target is 2,100 Bitcoin. So you're sitting on 730 just now, and his target's 2,100.
So he's got some appetite to continue raising and continue purchasing.
Now, how does he get there? Well, the number of shares in issue, 242 million, you see that doesn't quite add up to the amount of raisings that have been done. And that's because of this ATM facility, right? So the ATM facility is almost like a reverse of a share buyback. So every single day, with certain criteria, then there is a market operator, it was in the RNS originally, in there selling stock, right? Now, 7 million shares have been added to that number of shares in issue. The 7 million shares have been given to this company, and they're selling them every day. So that's like an independent, like when a broker buys, you know, Vodafone's buyback.
Yeah. So it's the same thing, but it's in the opposite direction.
In the opposite direction.
So they're kind of selling stock into the market.
Yeah. Maximum 20% of volume.
Yep.
And never below the previous night's close. So they don't take the stock down.
Right. Okay.
It's only if it's unchanged or higher, they're selling into it. Now, originally, he said that was going to take a month, and that was the 19th of June. So what are we, 2 weeks through that? So in theory, you can assume that 2 weeks of it's done. So 3.5 million shares.
And it's been rallying.
And it started when it was £5. So let's, whatever, that £2.50 average, 3.5 million shares. So that's...
And that's going to be used to buy more Bitcoin.
9 million of cash. And that can be used, once it's given to the company, it can be used. So that's another 9 million, you know, in theory, that you can add to the MNAV. So that's, you know, if we're going on that, it's not 100, it's 109.
Yes. Yeah.
So then you're dividing the 820 by 109. And then if they stick to the target of 1 month, then in 2 weeks' time, you got another 9 million or 10 million, whatever it is. So then you're at 120 million.
Yeah, that makes sense. Give me the risk though. So this is all very supportive. to the claims of Ponzi scheme and all those things you said at the start, what turns this around? Does Bitcoin breaking through 100 turn this around, or does that just give them more momentum to start buying because the price of Bitcoin is cheaper? Do you have to see long-term holders liquidate and so the share price is forced lower, which changes the MNAV? Is it if they can't get money raised?
I think that's the really interesting thing is that retail aren't selling.
Oh God, no! It's tightly held from retail.
Well, no, it's so everybody that's bought through all the wraps and things like that. Guess how many of them still own it, considering that it's gone 5x, 8x.
Give me the number.
So normally they would think it would be about 25%.
Right. Okay. Still hold.
86% of people still hold this.
Well, it's because, do you know why? It's because the share price has come down.
Well, no, it's because it's the community, right? If you're the diamond hands, it's a crypto thing, right? This can be a crypto community that when they buy things, they hold it because they don't think like we do in Stockland, right? If I see a 50% gain, I'm like, well, that's decent. They want 10x, they want 50x, and they're in it for the long term. So what the risks are, Bitcoin goes lower.
Yep.
Right? Because obviously that, not only does it take the MNAV down, the NAV down, but it also takes the whole rhetoric around crypto and Bitcoin.
It cools down, doesn't it?
Cools down.
It cools down, which you don't want to do.
Exactly.
And then, as Boise said, I think the other one is you if they can't raise, is a big risk.
Yeah, so that's the question. Why would they not be able to raise, right? Now, clearly it was harder at £5 than it was at £2.90 because he didn't seem to do one at £5. But as soon as it dropped to £2.90, you had 41 million raise. So if the next interesting thing is to then do, right, what if he does raise? What if he raises the same as he raised last time, which is, being, I think, prudent to say that, because every time he's raised more, let's say he can't raise more, and it's 41 million. Well, if you add 40 million, let's say you add 40 million to the 120 of NAV that we've just calculated, that's 160 million he's then got.
Yep.
Is that how many Bitcoins that?
160. Divided by
2,000.
Divided by $100, $100,000, 107,
but that's dollars. Remember, take it in sterling,
70,
and you're talking
75, 76.
So let's talk 80. If Bitcoin's 80,000, and you hold 160 million of cash, you can buy 2,000 Bitcoin.
Yeah.
So he has to do one more raise and finish the existing ATM, and he's up to 2,000. That's nuts.
Seems a big leap considering he's only got 700 odd now.
Yeah, but he's got 700 plus
cash.
Yeah, 40 million of cash or something. So then you've got to, right, because we're getting into theoretical land now, right? So what we're saying is he's put another 40 million in the coffers from a raise. He's done, he's raised 18 million or whatever from the ATM. So we're up to 160 million cash now, 160 million NAV, and you've added 10% to the number of shares.
Hang on, does that NAV already include the Bitcoin that he's bought?
Yes, that's
so it's not
all inclusive.
Yeah, so it's purely the cash that he can then allocate. You can't buy Bitcoin with Bitcoin. So he's got 780 Bitcoin. So take that out of the cash pile, as opposed to adding it, because you can't.
No, so altogether you've got 160 million. That's all you have to worry about.
Right.
Because eventually he buys Bitcoin with it, and it's 160 million worth. So you have to add shares in issue because you've just raised another 40 million from a market cap of 800. So that's 5%. So your shares in issue goes up to, say, 255. So finally, you've got 255 million shares multiplied by the current price of £3.40. That is a market cap of 867. Right? You with me?
Okay.
Your new market cap on an additional raise and the ATM being done is 867 million market cap. Divide that by 160 million of NAV, and you're back to 5.41 times MNAV.
And you've got the market cap at the moment, which is, because then you're starting to look about, where is it time to allocate? And it's 830 at the moment.
Yeah.
So we're saying it's probably priced correctly right now?
No, but all you have to care about now is we just worked out a new
MNAV.
and it's only 5.4.
And we're currently at an MNAV of 8.3.
So that's how quickly this comes down, is that it goes from an MNAV of 8, which is where it was when it was 30p,
Yep.
to an MNAV of 5.4, which is what it was when the stock was £2 last week, and it's rallied 50% since. So if this continually drops to 5 on one more raise, that is how the model works.
Sure.
Because then he does another raise and it's 4.5, and he does another raise and it's 3.5, and suddenly in 2 months it's 1.
But then what happens to the price of the stock?
Well, you would imagine it would go higher.
So is that how these things work? So the lower the MNAV, the higher the price?
No, the lower the MNAV, the more attractive it is to buy it.
Right. So sorry, the lower the MNAV, the more attractive it is to buy it, the more people coming to buy it, you would expect share price appreciation as a result.
Well, that's because you can't trade a 1 times MNAV.
Because then the model wouldn't work.
Strategies, well, no, because it doesn't make sense. Strategy is 1.7 and it's $100 billion worth, and it still trades on 1.7.
Got you.
So if this
because it's the premium, it's the price of the Bitcoin and the business and the cash, and it has to trade at a premium to that.
Yeah, because the whole model is that, because if you trade it 1 times, then you may as well start selling your Bitcoin to buy back stock.
We're getting told off by Phil. You are right. That is interesting, though. That's
the explanation of how it works.
That's framed a lot for me, actually. That's helped me a lot. I'm going to think about things.
But there are risks. The big risks are, of course, Bitcoin price coming down, regulation. That is the other risk. And they highlighted this yesterday. They did a full page of what the risks are. And one of the risks is that regulation changes in the UK.
Right. Yeah.
And also that ETNs are going to become possible potentially in the 3rd quarter.
So therefore the raisings become harder potentially because there's a different allocation. There's something you can allocate towards.
Yeah, you can buy Bitcoin directly.
Yeah.
Good.
Right. We're being shouted at by producer Phil in our ears. We were probably being shouted at by about 5 minutes there. So sorry, Phil. We went on a little bit, but hopefully that was useful. It was certainly useful for me.
Good stuff. Right, Boise. I'm sure all these questions will continue in the Discord. And after the show, of course. And coming up next, we've got Simon Popple, our gold expert. We're going to do a really quick change around. You'll be here in 2 minutes. Do you want to be in Bitcoin? Do you want to be in gold? I would say so, certainly more than the S&P 500, in my opinion. And that's why I'm getting beaten up so much on my P&L. We'll see you after.
See you later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Hey, trader friends, welcome back to Going for Gold with Simon Popple. Thank you so much for returning.
Great to be here. Great to be here.
On huge demand, might I add. I was like, Simon, you can drive the show. That's brilliant. I can go for a break, finally. Good to have you here because I heard you've been really, really busy recently.
Yeah, very much. I mean, obviously, gold's been going crazy.
Yeah.
And not only has it been going crazy, but I think it's going to be going crazy for quite some time. So, yeah, interesting times.
Loads of our guests here asking for your return because, of course, I've made this special chart for you guys and take a look there just to give you a weekly view. It added more than 2% in terms of the week. And this comes at such a mad time for the markets as well.
Yeah.
We saw the big, beautiful bill pass by the skin of its teeth there. What did you make of all that before we go on to gold levels?
Well, it's going to be more and more money printing.
Yeah.
And you can't print gold. And, 2.2 weekly gain. I stumbled across an interesting fact that gold's actually gone up in sterling terms on average 10.6% a year for the last 25 years or so. So, if you compound that, it's just extraordinary.
Yeah. I mean, this is insane, right? Like when we look at this,
Yeah.
and we look at charts a lot, and I know you look at data like myself every single day.
Yeah.
When you see these market drivers, when you see, Congress passing this huge spending bill, let's call it a spending bill,
Yeah.
and it's going to add trillions to the already large debt pile there. We're seeing dollar weaken as well. We saw that there are all these expectations now that even with the Fed rate cut expectations have been reduced. All that to me means inflation is going to go up. Prices are going to go up, and value is going to come down. Is that what your take from it as well?
No, completely. And I mean, I think that inflation going up is actually a very interesting dynamic because back in the day, going to cash was viewed as quite a sensible thing to do when you were uncertain. You sell everything, and if you went to cash, you'd sit on the sidelines, you'd lose, perhaps 1% or 2% compared to being in a fairly low risk asset. But now going to cash is actually quite dangerous in a way because
that's really interesting because we have two camps here, right?
Yeah.
We've got two camps, trader friends. Tell us which camp you're sat on. Are you on Luke's camp? So Luke earlier on, the chap that was sat in this chair, talking about how he thinks that the markets will continue to grind higher despite all the headwinds that we've seen, despite the tariff uncertainty. And then there's camp number 2, those that think that the debt pile can't continue to keep growing bigger and bigger. We're going to see some sort of kickback at some point. There's always a concern when you see, all these indicators like the greed index, at all-time highs. When you see signs that show there's irrational exuberance, we've seen markets, get to highs recently, despite even the geopolitical situation in the Middle East. Which camp do you sit in, and what do you think is going to happen to gold?
Well, I think gold's going to go up. We talked about MIDI when I last came on, market uncertainty going through the roof, interest rates, Trump really wants them to come down, debt is going up, and inflation expected to rise significantly. So I think that people should have some exposure to gold. A lot of people have got none. And the point I was making earlier about going to cash, I think having some cash makes a lot of sense because, if you've got some short-term things to cover, why not have cash? Gold's incredibly liquid anyway. But what I like about gold is you've actually got a way of protecting your purchasing power. And if gold continues to go up, you could actually do quite well out of it, especially certain things like certain coins are capital gains tax free and things like that. So I think that, it should be part of your portfolio. I'm not the kind of person who says, right, put all your money in gold, but I think that you've sort of described it as a binary situation, go to cash or stick your money into shares.
Because lots of people here are wondering, should they have, cash on the side or and wait to deploy, right? Wait for the opportunity to deploy, because we're going to have another scenario. No one knows when. If you do know, let me know. But no one really knows when that might happen, this correction. That's that camp. And so they have cash sat on the sidelines. And so you're saying you should deploy this into gold.
Yeah.
Now? When should they deploy it into gold?
I think that people should have a bit of everything, if I'm honest, because no one knows what's going to happen, as you know, and if the market does go through the roof, if you've got at least some equities and stuff like that, then you can enjoy that ride. If you've got some gold, with all this money being printed, it's difficult to see why the price would go down. And if you've got some cash, then you sleep at night, because if something does happen and you can buy stuff a lot cheaper, then you've got the cash to do it with. And to be honest, with gold, that's essentially cash anyway, but you're taking risk on the gold price rather than the currency.
Good morning, Arsax and Abby Fine as well, joining the chat right now. Steve Davies as well. Monkey Man also well. And I saw Andrew McKilvey earlier on as well. I'm a bit worried about you, Andrew, earlier on. Blake 7 and Caught Short also joining the chat here. Blake 7 listening to this conversation, asking, what's the best way to invest in gold, Simon?
I think that you need to start off by having physical gold. It's a bit like having it's like building a house. You've got to have some foundations.
So foundations.
Exactly, and then after you've got some physical gold, and you don't have to take delivery of it, you don't have to store it, you don't have to insure it. People can do it for you, but you just need to check with them. And that's one area I help people in. But I start off by getting some physical gold, and then you could perhaps get a fund. And I run something called the Gold Program, where I teach people how to put a portfolio together. And I use a fancy football format. So goalkeeper, defenders, midfielders, forwards. Goalkeeper, massive company; defender, smaller company; midfielder, new to production; forward, explorer. But you build from the back. And
It's like gold fantasy football.
Exactly. But one of the, I hadn't thought about that, but it's very true. But yeah. The big mistake a lot of people make is that rather than build from the back, they build from the front. And they get very excited and they invest in some forwards that they think, could do really well. And when forwards do well, they do unbelievably well. But chances of them doing well are fairly low. So quite often people invest in some high risk forwards and they lose a lot of money and they never touch gold again, which is wrong.
Lots of people also come out with their suggestions. For Tuck there saying SPDR, Gold Shares Index. And Boise saying iShares Gold ETF. Steve Davies asking, Simon, what's your view on large and small gold miners?
I thing I like about large ones is they tend to be producers, and as we're looking at, well, hopefully the gold price is going up. If you're producing something and the price is going up, your cash flow is going to increase, providing you can keep your costs reasonably in line with where they are. And so I do like large gold miners. They've started to do very well already, but I think they could continue. The small gold miners are, a lot depends on what they're doing, but what you tend to find, a lot of them they're small, but they're explorers. And if they're exploring near a big producer, I like that because there's more chance of them being acquired if they find anything. But if they're exploring in the middle of nowhere, there's no one around them that's a logical buyer of them, then I'm less interested.
Brilliant. Thanks, Monkey Man. We need a sneeze cut button here, but I thought I did that elegantly enough for no one to notice. But you and producer Phil did, so well done you. Let's take a look at some golden lines here. So I love it. I love it when I put a note to myself. This was I think if you guys remember, about 2 months ago, and I said, resistance at the 3,330 per ounce level, thereabouts, and we break above that. That could lead a gain into the 3,348 to 3,365 range. And so I've put that perforated golden line there, or dotty golden line, depending on what you like. Simon, I use yellow just because it's the color of gold, but also it's easy on the eye.
It is.
It's not, you not believe how many colorblind trader friends are out there, and also those who sit on the trading desk.
Yeah, I know. You can't beat a bit of colour. It's horrible when things go to black and white because everyone thinks you're wearing a grey tie. But no, it's.
So here we are, that level there, 3,348, and we are starting to. The price level, this is the daily chart, trader friends, starting to poke its head above that level now. We're looking, because this is a daily chart, I'm looking for, in terms of confirmation, I always say no confirmation, no celebration on the technical side of things, but bearing in mind that they need to go hand in hand with fundamentals, so we'll get to that in a second. So I'm looking for a close above that level, and if we see more green candles, then the march to the 3,500 mark is in play. But before then, it's still a wait and see. Spot gold still in a strong, of course, upward trend. They're still very bullish. But it has to be said, Simon, this is a fascinating bit, which is why I always say fundamentals have to go hand in hand with technicals, because the last few weeks have been the epitome of this. We have seen price action almost, and technicals therefore, disregard what's happening. It's like the market is now out of whack, right?
Yeah.
Not just gold. I mean, we saw the reaction after Iran, Israel kicked off.
Yeah.
But also on the oil front as well. I mean, prices initially went up, but then they eased, and then they eased on the second bunker buster attack, didn't they?
Yeah, it's.
That just to me means that markets are out of whack. They might be like so tacoed out or exhausted that they're not really kind of reading the usual signals.
Yeah, I think it's very, very difficult for investors because, for example, when Iran got bombed, you would expect oil and gold to go through the roof, and they didn't. But in terms of the gold price, the thing I would urge people to look at is what's happening in the US, because the gold price is obviously denominated in US dollars, and it seems to be particularly sensitive to what's happening in the US. And I think that the 9th of July, so next week, is the deadline for the tariff holiday, and we're told that they're actually going to come into force. So I don't know what day the 9th is, but I would expect if the tariffs do come in,
9th is Wednesday.
It's Wednesday. Well, I'd expect gold to be particularly volatile on Wednesday, and If they come in and it looks like they're going to stay, then it'd be no surprise to me if the gold goes up. But if Trump turns around and says, well, actually, we're not going to do it on Wednesday, we're going to give you another three months or whatever it is, then gold could well go down. And I think that's the thing that people need to keep an eye on.
Yeah.
And unfortunately, we don't know.
Yeah, we don't know. But let's just remind our trader friends of where we stand at this juncture before July 9th. So the expectation is that, most rates will be reduced to 10% until July 9th for negotiations. That's the reported fact at the moment, but reported by Reuters. Let's just underline that. But we do know that physical gold demand still remains subdued in Asia due to high prices, and India discounting narrow due to lower imports. This also all comes in a time when, silver, we saw silver go crazy recently.
Yeah.
We had a trader friend ask me earlier in the week, because silver tends to lag gold, are we going to see silver move in the same direction? Many wanting to get in on gold are like, well, maybe it's a bit too expensive. Should they be looking to get into silver, for example?
I love silver. And a lot of people, including me, are scratching their head going, why is silver trading at $36.83 or whatever, when gold is, silver has traded at over $50.
Let's go on my chart. I'm going to get silver out.
Silver is trading way below previous highs, whereas gold is trading at way above previous highs, so to speak. So I think silver is very interesting, but I suppose the issue with silver is, when's it going to happen? And I think that if you're a long-term investor, when I say long-term, you're happy to sit on it for 3-5 years, silver could be amazing for you. But I think that a lot of people look at silver and they kind of, if you look at the silver price over the last, well, there you go, that's a previous high up there on the left, and you can see it's trading way below its previous high. So if it goes back to its previous high, you can see the trend is definitely up. It could be fantastic, but from where it is to the previous high, just looking at your,
it's now at
that could be at least another year.
Yeah.
And that's assuming it continues to go up. So it's kind of one of those things where if you're prepared to sit on money, and not just sit on money, but silver is, as you can see from that chart, is very volatile. And but if you're prepared to sit on money and sort of take a few deep breaths when you have volatility, then
bite on the stick.
Yeah. Well, if you're buying silver, one thing I'd actually, I think makes sense is to average cost buy it. So let's say you've got $100. Perhaps buy 25 today, 25 in a month's time, 25 in 3 months' time, and 25 in 6 months' time, or something like that. Because if the price collapses, then you've still got some money to buy at super cheap prices. But if the price shoots up, at least you've got some money in the game.
Yeah.
And it may be that, if the price goes to 50 or 60, whatever it is, that you think, actually, I think I'll just stick with what I've got and I'll put the money in somewhere else. But I think it makes sense to have at least some exposure.
I must admit, I do like this chart because it is obeying, the principles, and just taking a look, that has currently already surpassed that, hasn't closed above, but it's making an attempt to surpass that February 2012 mark. This is the monthly chart, people, that we're looking at. But obviously, when you are looking at the technicals, make sure you zoom in as well. I like going from monthly to weekly, to daily, just to make sure, and always go to the left of the chart, to the left, as Beyonce says, and also then zooming in on the daily chart just to make sure that you haven't missed anything. So it is currently in that upward trend there. Silver, coincidentally, one of those that really is quite good at giving pivot indicators. So you can see that I have put in place several rectangular boxes there. And each time you see an engulfing, so bearish or bullish engulfing, it tends to show up quite well on the silver chart.
It does. I mean, silver's great, but it is so volatile. And that's why I'd suggest people have a bit of cash on the side, because the trend is, you know, the direction of travel is very clear. It's the speed of travel which is a bit more uncertain.
Yeah.
And I think that if you've got a bit of money in silver and some money in cash, you know, you could do very well. But it's money that you don't want to get too nervous if it bounces around, because it will.
So DCA, trader friends, or cost averaging or dollar averaging, we talked about, is just, you know, trickling in into an investment or a trade. And actually, there is another way. I know lots of our trader friends as well that actually have 20 legs, right?
Yeah.
On silver, or 20 legs in onto gold, and depending on the time frame of each leg, they just come out or increase their positions depending on which way it's heading. We have a question from R. Sachs as well, asking, I think it was further up the chat, asking where or how appropriate, or what is an appropriate percentage of portfolio to be in gold?
Ooh. A lot depends on how big your portfolio is, if I'm honest. And in terms of a percent, I'd throw it back to people and say, you want to have physical gold. People I use, Pure Gold Company, minimum order is £5,000. And so it depends on what, you know, how big your portfolio is. That's the minimum. And I think you should have at least that. You know, you should have some gold in your portfolio. How much you have in your portfolio, as I say, depends on the size of your overall portfolio, but you should at least have some.
So what's some, like quantify 10, 15, 20%?
Well, no, it's really difficult because you know, I have to be careful about, you know, I'm not giving any financial advice here, but I mean, I think that let me give you a really interesting fact that I found this week. Okay, 1920, average house price in the US was about $6,300, and the gold price was about $20, 27, something like that. The net number being that in 1920 it took 305 ounces of gold to buy an average house in the US. 305 ounces of gold. Okay. 2025 now, average house price in the US is about $450,000, but the gold price that was used in this calculation was 3,225, which is significantly lower than where we are today. Now, if you divide 450 by 3,225, I think it's around 140. So the amount of gold you need, okay, it's a long time, to buy your average house price is less than half what it used to be, which is staggering. And not just that fact, but, you know, the 10.6 fact and, you know, a whole load of other stuff. I think you should definitely have some gold in your portfolio. And how much you have really, you know, it's very much up to you, but you've got to have some. And a lot of people have got none.
Well, RSAX, just letting you know, I've got 10%. I'm looking to increase that. I have also re-entered the NATO ETF after coming out earlier on, but that's also based on uncertainty.
Yeah.
Bigger Beer is saying perhaps a set of complex statistics. It seems to factor in things that we as people aren't looking at or factor into the equation. Yes, it's the, you know, the big things that are happening, you know, over time. That Simon so beautifully encapsulated by, you know, the house price versus the gold, and how many ounces and how that's changed over the years. We've even got Call Me Walter saying, I think I'm a bit colorblind, I can only see red. on my P&L statement. Hopefully not just red. But such a pleasure getting you on again. Any questions for Simon Popple? Please get them to me on ask@ig.com. I'll send that to him. And if you want a link to his site as well, producer Phil is going to get it to you and put it onto this chat here. Elliot Harris is going to be on next, but if you want Simon on again, do message me and hit that like and subscribe button, trader friend, because this show is for you, so you get live, real-time answers and also investable information.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hello, welcome to Live from the Trade Desk. We've got Elliot Harris, the head of options. All right, pal.
Good morning, Rich.
You got to get used to these Scottish accents because you're up off there tonight, aren't you?
I am. Fantastic. Yep. A little cheeky golf trip up to St Andrews with IG Jamie, who's been on. So a nice bit of golf for the weekend. And
are you actually going to be playing the old course?
I don't think we'll be playing the old this time. I have done. I think we're going to try one of the others. I think I shot 76 around the new last year, which is pretty good.
Wow.
Then we play in a competition on the Sunday on the Castle course, which if any of you have ever been up there, that's actually the best one. You aren't allowed to say it because it doesn't have the history of the old course.
Yeah.
But as a layout, it's a far better track than the old course. So first year we actually went up there, 200 players, and me and Jamie actually won the trophy. Unbelievable.
Oh, so they're to defend it this year?
Or no, that was 2 years ago.
Okay.
Yeah, so we need to get it back, but
Brilliant.
Our name's on there.
So, right, well, enjoy that. You're flying up to Dundee, are you?
Edinburgh.
Okay. Take the easy route. Well, have a wee whiskey for me this evening. because I will certainly need one because I am short calls on this rampant market, Elliot, and it's hurting.
Ouch, yes. People say that it's not the puts that hurt you, it's the calls, because on the put side, you've probably got more premium that's priced in there, and it's generally a short, sharp shock. If you can survive that, markets generally like to bounce, whereas on the call side, you don't have the vol that's priced in, and you get exactly what we've seen over the last 2-3 weeks of just a relentless, sustained rally. So it's kind of like a slow death, if you like.
The creep higher.
They really do.
Is just let's have a look at that over the past, like you say, since Monday the 23rd. It is just absolutely relentless. A little bit of reality this morning. The Americans are too busy partying and forget that the end is nigh for their economy and exceptionalism. So what do we think? I mean, what has happened to vol in the last month then?
Oh, vol's been absolutely crashed. Crashed even.
Take a look at the VIX there.
I look at the vol surface a lot, and yeah, if you can just give me 1 second, hang on. Okay, yes, all the geopolitical risk has completely disappeared, and also that was decent economic data out of the non-farms yesterday. So now you're looking like a rate cut in July, completely off the table. And September's now 20 basis points priced in. But I can see that easing over the next 4 to 6 weeks. I really can. So now there's only 2 cuts that are priced in by the end of the year. So roughly 50 basis points by December. Pre-non-farms, that was about 67, 68 points. So quite a shift on what was a decent figure, really. But yeah, vol's just been absolutely crushed. If we have a look at S&P vol, 1 second, where was it?
Just quickly showing everybody the year-end expectations, and the favourite being, like you say, 50 basis points of cuts. But you've even got a small percentage chance now of no cut at all, and that's in there.
I really would not be shocked. I really wouldn't.
Yeah.
Like, if we think that at the start of the year they were pricing in 1.5, I want to say it might have even been slightly more. And yeah, just the data just keeps on coming.
It does, doesn't it?
Yeah, and it is just relentless. And indices haven't cared a single iota about kind of what's going on in Iran and Israel. It's just a relentless rally. So for those that are short calls, it's a tough game you're playing at the moment.
Yeah. So only the bravest can possibly fight on. So
you can always change your position, Richard.
Oh, sorry, have you met me, Elliot? I've rolled them up. I've rolled them up from 6,000s to double the size of the 6,500s. So, and that's for Dick. But what I am doing is trying to make up for it elsewhere, of course. So I'm long gold at the moment. We've obviously got a little bit going on elsewhere, but oil. What do we do in oil there? I'm guessing the vol's collapsed in that as well.
Yeah, just before I touch on that, I will just very quickly say about index vol. I know I've come on in the past, and vol does essentially have a floor. Okay, so there's only really so low that vol can really go. Now, on the FTSE for a front month, that generally, I'd say in my over 20 years of being here at RG and basically running the desk, don't really see FTSE vol go sub 9%.
Okay.
Now, I've always said if you were to buy options when vol did hit that 9%, if you can buy options pretty much on the floor, it's a nice trade. And okay, you might not be rewarded in that one particular month. I'd have probably a good bet that you would say you would be rewarded within the next 3 months.
Okay.
So FTSE vol on Wednesday actually hit that golden 9%.
Shall we have a look at August?
Slightly.
August FTSE or
yeah, go on,
SEP?
Yeah. Yep. Well, if you look at July, obviously that goes off in 2 weeks' time.
Yep.
August is slightly higher.
Okay.
Well, I see July at
9.6,
9.8.
yeah.
August, yeah, August is around about 10%. Yeah, so we have bounced slightly already. S&P vol is around about 12 or 13%. So S&P vol's probably got a little bit more room to go. I think the lowest I've seen there is probably around 10%. So got a little bit more room on that one, but we are approaching the floor of vol here. Okay, so for those who like to sell options, just need to be a little careful that you are selling options at a historically low vol.
That's
okay?
the thing. Yeah, I haven't found myself selling anything recently. I think
nothing,
I would.
Yeah, nothing stands out. It becomes and you kind of get this value play where it's like, okay, I'm less sure that that's a good value trade now. And trading, it's all about value, essentially. If you can have that value edge over the long term, that'll stand you in good stead. But in terms of crude, yes.
Sorry, just to have a look at this FTSE. So, Elliot, I've got the August up. What about something like an 88.50 call?
Yep.
And then selling the 90.50 call against that. So that takes us down to what, 72?
Yeah. You could even do it on a 2x1 if you like.
Yeah, I was just thinking that. Yeah, okay. Let's talk about two by one then. So selling double the size of the 9050s, you receive 42 ticks for that. Take that off the 94 you're paying for the 8850. That takes us down to 50 ticks or 52.
Yep.
And then selling an 8500 put for 42. And for 10 ticks.
Could even sell an 85. Yeah, you could even sell an 85.50. Certainly, if you come and spoke to me or you did the trade over the phone, I would absolutely do that for you flat.
Fantastic.
Yeah,
something
I
like
don't think
that.
that's the worst trade because you're buying yourself a nice range and you don't need FTSE to really pop too much further.
Yeah. I'd actually be worried about it going too far there. I'd be worried about a sort of 9200 and you losing a lot of your gain. But yeah. Now, do you want to look at a quick crash protection or oil?
Go to oil first, and then we'll come back to the protection.
Right.
Yeah. So in terms of crude vol, I said with Ange last week how much vol would have been absolutely smashed. Now completely due to the ceasefire. I've got a man who's banging on my door, but you'll have to just ignore me. Apologies.
Well, don't worry. We've got 1 minute
That's
left.
Fine. No. It's absolutely fine. Right. Yeah. If you can just bring up that chart that I sent you about the OVX.
Oh yeah, I've got that in front of me. Unfortunately, I can't get that up because it's on the old email.
Okay. No worries. Yeah, so what this was showing was where implied vol was actually gone to. During, say, a month or so ago, implied vol actually went over 70% and has now been absolutely crushed. Now we're basically sub 40%. So
wow.
You've really seen that come off aggressively, extremely quickly.
Yeah.
Now, the 1 month, so even over the course of the last week, that's fell a further 10 or 15%.
Okay.
So that's been absolutely crushed. Okay, so that's actually now trading below RV to the tune of around about 20%.
Wow.
So that's quite a difference. Yes, you've got implied vols, say high 30s. RV is still up there.
Yeah.
In say mid 50s. That's quite a gap. So,
but it must be dropping by the day, I'm guessing.
Gap on that. Oh, absolutely.
Yeah.
Definitely. Yeah. Okay. So it will take RV just it's very rare that you get that way. Certainly on indices.
Yeah.
You get the IV that's generally 95% of the time over RV, and certainly has been for the last 3 to 6 weeks.
Okay.
Oil works slightly differently. Yeah. So the IV in oil's been by far the richest, but it's now coming off.
Good stuff.
Similarly on gold. Gold
Right.
was the second highest, yeah, and that's been smashed as well. But a quick protection trade, go on.
Well, no, we're going to have to go, unfortunately. I'm getting the dragged out the room by producer Phil here, Elliot. So, mate, thank you so much for joining us. We've got Joachim coming on next. And I thought it was trickier to meet somebody more bearish than me, but he's going to be in this seat in 1 minute's time. Elliot, have a wonderful weekend up there in sunny St Andrews, and we'll speak to you next week.
Thank you, mate.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, trader friends, welcome back to Trader Experiences. And we are joined, Investing Experiences even. We're joined by the head of Panmure Liberum's research and strategy team. Thank you so much for joining us, Joachim. Everyone's been asking me, when are you coming back? When are you coming back? I'm like, he's in Rome, leave the man alone.
Exactly. Can I not have a holiday once in a while?
I'm sorry, I called you whilst you were on holiday.
Yes, you did. But then again, I'm used to getting calls from you at like 3 o'clock in the morning and stuff like that.
It's not my fault if I can't get, I'm not across your very, very, busy jet-setting lifestyle. Normally, it's Europe, quite civilized, but sometimes you're in Asia.
Yes, and sometimes in the US.
Let's get straight to the markets because lots of people wanting to know what your view is because we've got very, very evenly spread, two camps here. One camp thinking that perhaps markets are going to continue grinding higher. Look at the S&P here. If you want to whack up my chart, I mean, nothing is holding this back at the moment. Look at that bounce back since that April tariff tantrum. The other half saying that, amidst the big, beautiful bill, uncertainties of tariffs, there's a kaboom coming.
And I'm somewhere in the middle, as I should be. No, I mean, if I have an investment horizon to the end of the year, I would probably be, still long the S&P 500. But I think the next 3 months over the summer are going to be very, very difficult. There is a lot of irrational exuberance in the S&P 500. People have basically bet their money on the trade deals coming fast next week and no higher tariffs anywhere. We heard today overnight that Donald Trump might be starting to send out some letters already today. I do think, and I still operate under the assumption that in the end, most countries will settle with a 10% tariff, with the exception of China, which will obviously have a much higher tariff. And if you think about the next 12 months, the US can deal with that, the stock market can deal with that. However, we also have to be aware that even in this kind of optimistic case, the US faces about a 1% inflation spike in the next 6 months. And that's what the stock market, especially in the US, has not priced in. Another one, yesterday's non-farm payrolls came in much stronger than expected on the headline number. And people are like, oh, well, that means the Fed is not going to cut interest rates, which I don't think it will because mostly of the inflation pressures. But what people didn't realize was that if you actually looked at that non-farm payroll number, it looked like the socialist states of America. Because non-farm payroll numbers overall came in at 147,000, above expectations.
Above expectations, that's right.
But private payrolls came in at 74,000 versus 107 expected, about 25,000 less than expected. So where's the difference? Well, the difference is state governments have hired like crazy. And that is not a sign of a healthy economy. Also, unemployment rate went down.
It did,
Yes,
to
but why-
4.1%.
Yes, but participation rate also went down. So what does that tell me is like a lot of people have given up looking for jobs.
Yeah. And we always knew this was going to happen, right? We have those people sort of taking those Doge plans. I read somewhere that you could just type Elon Musk style to whichever state department you're working in. Didn't even have to put in anything in the email.
Oh no, it's like
Just
nobody
in the-
has the time to
just
read that.
in the title, you know, voluntary redundancy. And then an email would be spewed right back telling you exactly what you will get, when you will go, when your last day is, automated. But we always knew that there would be, you know, hiring in the background, you know, elsewhere. So, you know, a moving of labor. But it's really interesting that there's also a ton of people out there that must have just given up looking.
Yes.
Yeah.
Especially if you are in a rural area in the US, like, for example, the Forest Service, which has been massively laid off. Yeah, but if you are in the Forest Service, you are somewhere in the wilderness of the US. There is no other job except the Forest Service there.
I'm glad you put that up because I was going to be devil's advocate. Like always, you know, poking Joachim's theory. He's very used to me calling up and going, I don't agree with this.
That's fine. You're wrong, but that's fine.
Well, the US job market still remains very resilient. And this could be why, you know, I'm just being devil's advocate. This might be the reason why we see this continued melt up. Because unlike places like Europe, they have one currency.
Yeah.
They have one language.
Yeah.
What that means to me is that someone who maybe is a carpenter in Illinois suddenly, you know, gets turfed out, made redundant. They can easily go to, let's say, Texas, where they need lots of carpenters.
Yes. No, absolutely. And that is the big advantage.
And you can't do that in Europe, right?
Exactly. And it's a structural advantage that the US has. It has a much more flexible labor market than Europe or other areas in the world. And that is why I'm not long-term bearish on the US. But I think that at this point in time, the S&P 500 and US stock markets in general reflect unbridled optimism. Nothing can go wrong. While I think that in the next 6 months, some things will go wrong. Tariffs will go higher. Inflation will move higher and the labor market will deteriorate. It is not something that I'm worried about for 2026 because thanks to the one big beautiful bill, we're also getting more fiscal stimulus or like lower taxes, which will also support the US economy in 2026. But we have to get from today to 2026, and that's six tough months for the US economy.
Speaking of that, Ray Dalio warning of big painful disruptions after that bill. But what I want to point out is the key point here to read is the founder of Bridgewater says terrible economic consequences unless the deficit is cut from 7 to 3%. Is that something you agree with?
Absolutely, yes. So you have to be aware the US at the moment is running its highest debt to GDP in peacetime, its highest deficit in peacetime, and the budget bill that will be signed into law later today adds another 1 to 1.5% of GDP deficit each year for the next decade. Now, the Congressional Budget Office says that this will increase US debt to GDP ratios by about 10% percentage points over the next 10 years. And they project that in 2050, the US will have 147% debt to GDP ratio. So basically, the US is becoming Italy. In fact, the CBO's projections are way too low because the CBO, by law, is bound to use the law as it is written. However, as we've just seen with this bill, politicians don't like to expire tax cuts. And there's another organization in the US government that makes forecasts how the deficit and the debt will develop if things do not change. And that's the US Treasury. And the US Treasury forecast, assuming that nothing changes, says that by 2050, the US debt to GDP ratio will be 250%. And by 2100, it will be 535%. So guess what? That is at some point in the next 30 years going to be a problem. But when? Anybody's guess. I think what we're going to see is that next week and over the next couple of years, long-term treasury yields will move higher because investors demand a higher risk premium. And that is increasingly becoming a problem for the Treasury when they want to issue new debt.
Being devil's advocate again.
Yes.
China and Japan, they're going to, currently anyway, they're going to continue eating up all this debt. They're going to continue buying this debt, right? Where's the breaking point?
So they are going to continue to buy this debt. And the big advantage that the US has is that it is the world's reserve currency. And the world's largest economy at this point in time. And that is the saving grace why I don't think the treasury market will implode. That's not going to happen. We're not going to see a Greece or European debt crisis.
And we saw it in Sintra recently, Lagarde saying, it'd be still very tricky for the euro, for example.
There is literally no alternative there.
This is the only alternative, people, until there is another. But at the moment, this is the only alternative, dollar.
But what I already noticed from my travels in Asia and what I notice with people that I speak to in Europe, big institutions, is they are all diversifying. Yeah? They're buying a little bit less dollars and a little bit more euro debt or a little bit more Swiss debt, etc. And here's the problem. Because there is so little of that stuff around in the market, even a small shift away from the US moves the markets in European corporate bonds, in European government bonds, and in Swiss government bonds.
Bigger Beers chiming in on the chat saying US Treasury market drying up and rates are going bonkers because foreign markets have become more resistant to buying US debt. Well, that plays and dovetails what Joachim was talking about diversifying debt. Also, Friar Tuck saying perhaps tariffs placed on China may not be too high because China has agreed to open up some markets and treat more foreign companies more fairly, i.e. rare earths. If so, support for US markets. Any thoughts on that?
Well, again, this is what the market is pricing in at the moment. The market is pricing in that we will get a nice, friendly deal with China and the EU. Those are the two most important ones. Everything else is Canada, Mexico, EU, and China. Those are the four to look out for. And I agree, we will get a decent trade deal with all these countries and these regions. However, we also have to be aware that, as I said, even if we get these deals of 10% tariffs and things like that, we're still facing a 1% increase in inflation in the US, which nobody has on its plate at the moment. Plus, we also have to be aware that if Trump caves too much and gives a sweetheart deal to everyone, you can be sure that in every press conference, somebody in the background will go taco, 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 taco. So the end result is he has to make an example out of at least one country. Who that's going to be, I don't know. At this point in time, I think he's going to play hardball with the EU or Japan. And again, the market is not prepared for any of that.
Lovely. Which brings us to a nice poll, Phil. Producer Phil, do you think we've got time for a poll? Shall we ask the our audience and our trader friends out there, you know, what if they think there's going to be a correction in the next 3 months or 6 months, or no correction whatsoever? There are 3 for you. Markets will continue to melt up. Bigger Beer is saying, I have alerts for US bond auctions in my trading because market volatility as a result of poor bond auctions can spike or crash equity prices from time to time.
True.
Yeah, very wise. Raul also saying, feeling retail investors are the only ones who are emotionally bullish in the S&P and the big hands are out of that market.
That is very true. So here, a couple of things just to sway the poll amongst you guys. First of all, if you look at...
That sound was very good, by the way.
Good. If you look at hedge fund positioning in futures markets, they have gone from net long US S&P 500 in April, at the beginning of April, to net short now. And in the meantime have increased their net long positions in international stocks. Another one, I have this proprietary sentiment indicator, which looks at the difference in overnight returns in stock markets versus intraday returns. Because we know that if you look at overnight returns, last day's close to today's market open, that's when markets are incredibly rational because we all have time to digest information, earnings, macro news, etc. If you look at it from market open to market close during the day, when we all are kind of there and we all are human, that's when all the behavioral biases come into play, and that's when the sentiment shifts markets away from fundamentally fair values. And over the last 3 months, the S&P 500 is now 15% above fair value, which has happened in the last 10 years only twice. Once it was followed by a 10% correction, once by a 20% correction.
So which are you expecting now, Joachim? 10 or 20?
10%. I'm not super bearish. I don't think this is going to be the end of the world or a new bear market even, stuff like that. But it is definitely tradable. It is a correction where I think if we're going down towards 10% in the next month or two, it is a really good time to buy US stock markets.
There we are. You heard that here first. Lots of people, Friar Tuck saying, what size correction are we talking about? I heard Joachim talking about 10%, but no disaster, he's saying. But it'll be a good time to look at avocado by the dip. We're not giving any financial or any advice here, just saying that this is what we're talking at the moment. Kieran McKenzie asking, where's my flat number? I'm not quite sure what that is. Bigger Beers. Oh, the poll. We've got the results for the poll. Bigger Beers saying overnight returns are massive, but lately they've been kind of small. And Jugger, who hails from Germany.
Oh, there you go.
Yeah. Saying seasonal downwards until September, which kind of ties into what Joachim was saying earlier. Bigger Beers saying I track monthly pivots on the S&P 500, and lately it's missed the last 3. Feeling a little frothy.
It is a little frothy.
You talked about ARK as well.
Yes. No, it's like, I was funny. As I read an article on Bloomberg 2 days ago where they said like the market is showing signs of irrational exuberance. And the first bullet point under the headline was Cathie Wood's ARK fund is going through the roof. And that's usually a good warning sign because it's like, you know, when Cathie Wood is making money, it's time to sell. Just like when Nouriel Roubini makes interviews in major press outlets, it's a good time to buy. That's kind of a good signal.
Let's very quickly check on the dollar as well, because listening to everything you've been saying, all that means to me is weaker dollar. Is that the kind of mood music you're reading to?
I think so, yes. Again, this is the rebalancing trade away from the dollar that will weigh on the dollar versus euro versus Swiss francs, but also versus Japanese yen.
Cool. Right. We got the poll results out, Phil? Not yet. Right. He's getting there. So I'm going to show a few things up that we sometimes talk about on this show. Here's the Fear and Greed Index. And we talked about artificial exuberance as well. This all ties in with what you were talking earlier. What other signals are you looking at? I mean, we talked about gold with Simon Popple earlier on.
Yep.
And we had, for example, gold up, and gold seems to be the other thing that's tracking higher as we speak. The ongoing uncertainty, tariffs of uncertainty, all that continuing, in your view, to bolster gold?
Yes, especially the rising deficits and the increasing risk premium in treasuries without much of an alternative to treasuries. That is bullish gold.
A person on our chat, a person.
There you go. I'm glad you're not a bot.
Yeah, you're not few or a troll. Are you referring to the European or the US markets? In the US, we don't expect any significant dips. We have to be selective and fast. SPY is no longer a gold standard.
I am thinking the US S&P 500 is down for 10% correction, but be aware if the S&P 500 is down 10%, Europe will fall in sympathy. They are not as irrationally exuberant, so I hope that they will only fall a little bit less. But we all know when the US market coughs, the rest of it will also sneeze.
Speaking of sneeze as well, want to also head over to the commodities space. WTI continuing to weaken as we speak here. This is a daily chart, trader friends, and we are at that $66 a barrel here. You heard it here first. Joachim was on set way before, the bunker busters.
Yep.
Landed. Very, very prescient. And taking a look at this continued easing for oil prices, do you think?
Well, I mean, we are facing now no escalation in Iran for the time being, and Donald Trump seems to be very eager to get the negotiations started again. And in the meantime, in August, we get the production expansion by OPEC+. So it isn't a setup that is bullish oil for the time being.
Right. A person also chiming in saying Bitcoin getting heated here. We come again? Oh, the poll results are in. Would you like to read them out, Joachim?
So, will there be a market correction? In 3 months is the winner. 48% of you say that in 3 months will.
Is that because he?
Of course. This is why I do this.
In 6 months.
In 6 months, 25%. In 9 to 12 months, 12%. And only time will tell, 12%, which is a wonderful way to saying, I will stay on the fence.
Yes.
And I'm going to B&M and buy you guys a fence for those.
B&M.
No, what's the home?
B&Q, darling.
B&Q.
B&Q. Oh, he's got soft fingers.
Can you tell? This is the softest hands you will ever find, okay?
On that note, we're bringing on another pair of soft hands.
Okay, where is this heading?
Chris Beecham is going to come and talk about all the key events that are going to move markets in the coming week. Chris Beecham is our chief market analyst, and we often joke with him on the Vol desk as well that we should have a website called Chris Beecham in a penny or Chris Beecham in a pitiful. Yes, you're getting a picture. But it's been such a pleasure.
Good.
And it's great when we have someone on who can give quantified, really kind of rational discussions for both sides of the fence, or even for those of you that are sitting on the B&Q fence that Joachim's going to buy for us. But we'd love to have you on again. So
anytime.
Tell us when your travels are happening and we'll try and get you in. And all of you, any questions to Joachim? I'm sure there'll be plenty. Please hit the like and subscribe button, because that's the only way we can get them to him. He also has a wonderful newsletter if you want to hear him discuss, i.e. rant a bit more. Email me on ask@ig.com. Any of your questions, I'll bung it to him. Right, stay there, because Chris Beecham is coming up next.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, trader friends, welcome back, and we are joined by the one, the only Chris Beecham, Chief Market Analyst here at IG. How are you, Chris?
I'm very well. Thank you. Enjoying the sunshine. It's warmed up again.
Nice, nice. Are you off to do some sort of sport today?
No, don't be silly. No.
I
It's
had
the
to
furthest thing from my mind.
say
Oh, well, the
that.
test match is on, though, so that's the important thing. Cricket's
Yes,
on. So.
that is important. That is important. Also, I'm trying to share something with you from yesterday, but I'm going to have to get to that at the end of the show. So if you want to see what happened with IG and Wimbledon yesterday, you have to stay till the very end. Chris and I are going to take you through some of the key movers in the coming week, although the Americans have sawed off and started their barbecues already.
Yeah, so it's a bit of a funny day, as ever, with the US out of the picture, liquidity disappears, European markets. Don't read anything into these moves today, really. It feels like the rug's been pulled out from underneath us because you've got a bit of weakness in Europe, to say the least. Asia's a bit mixed. Obviously, Trump went off to the 4th of July with a nice little parting shot about sending countries letters about tariffs. So this has reignited the tariff fears just hours after we got that incredibly generally positive non-farm payrolls reading. Obviously, it beat expectations and once again reminded us that you should never, ever pay attention to the ADP figure because it's always a red herring. But there are signs there of weakness in the figures. If you look at the private payrolls figure that continues to decline, actually it might still mean that, well, a July cut from the Fed is off the table. September is still very much a possibility.
Yeah. And we saw that, once that jobs number come out as well. Tariffs. Any surprises expected? We had Joachim here earlier talking about this, and expectation now is that there's going to be, 10%, above 10, 20%, some reports have said. But Joachim his point was, you have to be very wary that, Trump is going to want to make it seen at least that, he means what he says and he's not taco. So you expecting any fireworks?
Well, there's always the potential, and he was talking about Japan overnight and the rumours that they might face an even higher tariff than the one suggested on the 2nd of April, around 35%, because in the US view, they've been recalcitrant. They're not been doing as they're told in negotiations. Obviously, Japan's very concerned to protect its car sector, so they are looking to negotiate tough, really. And the other problem is you've also had reports that the EU and China will cancel their meeting next week, so that's a worrying sign on that front as well. But it's definitely the case that what we have is Trump's desire to be seen to be strong with the whole taco trade. Is it still live? Is it still a thing? Will this be the talk? And then there'll be some kind of deal, because obviously his comments overnight saying that he doesn't want to push on with trade deals. He was just done with it now. He wants to just send a letter, which is very typical of this man with a short attention span.
Who do you think
is going to
be? Yeah, really. We're going to see what happens. Who do you think is going to be the sacrificial lamb? Do you think it's going to be the EU? Is it going to be Japan? Because
well, the EU is the one he always has the biggest antipathy for, really. I think, although as we know, Trump's obsession with tariffs was very much sparked by a visit to Japan in the 80s. I think so. We have the two big bugbears, or the more distant bugbears, apart from Mexico and Canada, obviously, as well. So that's why you've got a bit of weakness coming through, particularly in European markets this morning. Though, as I say, try not to read too much into this, because we'll see what happens when normality resumes and US markets come back to the fray next Monday. This Monday coming.
Yeah. And Jugger chiming in, talking about why is there a sell-off in the European stocks 50. To be honest, European shares pretty much, I'm just looking at my charts here, looking all risk off. I mean, it's, because of the lack of liquidity on the US side as well, because they're all probably now getting ready for great celebrations at the weekend. Also, it's because of these uncertainties surrounding the US trade deals, because that July 9th deadline is fast approaching. Right, plenty else before that. We've also got the RBA, haven't we got, Chris?
Yes, you're expecting another 25 basis point cut from them, which is interesting. So there is some elements of dovish policy around the globe. We'll see what they say in terms of the outlook for the Australian economy. So do keep an eye on that. Of course, the Aussie dollar has been a very strong performer thanks to US dollar weakness. Whether that takes some of the wind out of the sails here for the pair will be one to keep an eye on. It's not a particularly heavyweight week, with all due respect to the RBA. You've also got China inflation, and then you've got Fed minutes. But given the news we've had since then, it's very much, I think, they're not important in terms of the economic data. So it's a sort of a second tier week at best, really, and not much of that, really. It's certainly quieting down.
Interestingly enough, just looking at Shell as well, to revisit a story that we have been talking about recently. It seems to have died down now, this whole Shell BP business. But having a look at the shares there, they seem to have come off its list. This is daily chart, trader friends, and it's starting to perk up again, heading towards highs last seen the 23rd of June there, but still at that 26.18 handle there. Interestingly enough, it's often said in the city that if there is a deal to be had, normally the people who work for those companies are told not to talk about it. Do not talk about it, even though the company says, no talks have happened. And what's interesting is I've checked in with a lot of BP friends, and they've indeed not talked about it, and no one seems to want to talk about it. So one to keep in mind there, maybe.
It is really. I suppose Shell will do its best next week to really put a bit of spin on how it's doing as a business, and because to try and detract attention away from the BP story, because the focus will be, no, this is Shell's moment in the sun. We are, the shares have done okay this year. They're essentially 1.5% higher so far this year, and just without the dividend. So it's not an atrocious start to the end. It's recovered its losses from February. As Joachim was saying, of course, with the lack of tensions in the Middle East at the moment, oil prices have had a lot of the pressure to the upside taken out of them. So that's not great in one sense for these oil majors. But I think Shell's focus will be, how are we doing? Let's not talk about BP.
Cool. And just whacking up the S&P 500 there, because we heard from Joachim earlier on, Chris, that he thinks that perhaps in the next 3 months or so for the S&P 500, he's looking at a 10%, up to 10% correction there because of all these uncertainties. And what he says is now just, markets moving higher for no apparent reason. And he is also of the mind that many of the big players have come out, and actually the exuberance is from the retail market. Are you on this camp, or do you think we're not going to see such a big shakeout next 3 months?
Well, if I have to, always possible is the ultimately unsatisfying thing I can say. Now, if you look at where we've come from, this huge rally, yes, it's been very much with a bit of weakness in late May. It's been mostly a one-way move, particularly over the last 2 or 3 weeks since the news of that ceasefire in the Middle East. So, yes, I think if you're looking at it now, the risks are probably tilted in the short term to the downside, particularly with tariffs coming into play. The possibility is here that something will come through that just is enough to unsettle markets, is enough to unsettle investors, and that could lead to a bit of, let's call it profit taking to start with, and then it begins to turn into something a bit more serious. But certainly we've had a long period now since early April without a significant move to downside. So the risks are probably skewed in that direction. Momentum doesn't run forever. It's been a very powerful force. But with tariffs coming back in, August, we're not saying August is always a volatile time, but it's just a natural time perhaps for just things to ease off a touch. It's highly likely. I think if you look at what you normally see over August and September, there tends to be some weakness late August, early September, before we get into the infamous Q4 rally, which is the strong period for markets. For markets, the strong periods, certainly for the S&P, you're looking at October to April. You do get gains over the summer months, but it's usually flat to better, slightly better, and then the stronger period comes through from October. So we are just in the dog days of this rally, I think, in the short term. And it's true that at the moment, you could probably argue that the risks of even something like a 10% correction, which would take us back down to 5,600, which is those early May lows, would set things up quite nicely, perhaps for a rally into the year end.
Right. And so just a summary, trader friends, we've got RBA on the menu this coming week. We also got China inflation expected to remain subdued there. And also Shell earnings. We've got tariffs, of course, that's the biggie. How much in the way of tariffs is going to be confirmed. No one really knows yet. Lots of letters flying around. Lots of people on the chat also asking about, Jugger are saying probably drawing down on Eurostoxx 50. Jugger saying strike at 52.75 for weekly bull puts. So getting kind of nervous over there. Speaking of nervous, where were you? I was trying to wind you up with that sports comment there. Where were you when we were hitting tennis balls in Spittle Fields yesterday? We're going to get Terence to bring up a video. Yeah, I was trying to get you down there, Chris.
No, not a chance. I'm not a tennis person. Can't do tennis. Can't do tennis.
But why not?
I just hopeless with bat and ball. It's always been the way. So I'll leave it, or tennis racket and ball in this case. So I'll leave it to the experts.
Because
I was busy writing the week ahead. That's what I was doing.
Well,
some of us have work to do. We can't just
thank
jump
goodness.
off
For
and
those of you
hit
that were
tennis balls.
wondering what it's all about, it was the IG SOS campaign, Save Our Stock Market, and we were down in force at Spitalfields to make sure that the activation campaign got off to a great start, and loads of people were there. I also put it on my Twitter, hoping that some of you would show up. Terence, can you hit the video for us? There we
Cash
are.
returns are terrible.
It was covered on all the main newspapers as well. Boy, was it a hot day, and it ended at around 7 p.m. last night. Well, for those of you who haven't yet caught up with what the SOS campaign is, producer Phil's going to whack that. There we are. My goodness, that NVIDIA chip that I've implanted in his ear is working. Whew. So it was a great day. We missed you, Chris. Wish you were there. And we are going to have loads more to talk about next week. Can't wait. Tariff. Was there going to be another tariff tantrum? We don't know. But if you would like to continue discussion, there is the Discord. Are you in on the Discord yet, Chris?
No, not yet. No.
What are you up to this weekend then?
I haven't the faintest. I haven't been told yet. I don't think there's that much on this weekend for a nice change, which would be good.
Right, we will see you guys, bright-eyed and bushy-tailed, on Monday. Have a great weekend, and see you on Discord.
Bye-bye.